Federal Reserve says it's scaling back plans to raise interest rates because the economy is showing mixed signs.
To help us sort this all out, we brought in CBS News business analyst Jill Schlesinger joining us in the studio. Thanks so much for being with us today.
It's great to be here.
So let's start with borrowers. What does this mean for them?
Well, it's pretty great news because, the Fed basically said they're not touching rates for a while. Maybe one, maybe two interest rate increases this year. That means it may be a great time to go refinance your house. Mortgage Bankers Association said rates now at 3.79%. It's the lowest since January of 2015, so that is good news. Borrowers for cars, really good news. Student loans also came in a little bit cheaper than they were in the previous version. So, these things are expensive, but it helps every little bit, really does help your bottom line.
All right, on the flip side, how about the savers?
Oh, you poor savers. I am so sorry because this is terrible news. Savers have been struggling for almost 10 years when you think about it. So what are your alternatives? You've got to figure out a way to try to boost that bottom line a little bit. You may want to look at internet banks, credit unions, which tend to have much higher interest rates than the big banks and lower fees, so that's terrific. You also may want to consider something interesting. A lot of people put their emergency reserve fund in a longer-term CD. Has a higher rate, but you've got to pick one that has a low penalty for blowing out early just in case you need the money. I know, it's like 1% versus a tenth of a percent, but every little bit
much of a difference. What about interest rates going forward? What do you see for the rest of the year, Jill?
Well, we are having a Fed meeting in July. I don't think they do anything there. We have a Fed meeting that's coming up after that in September. That may be the one where maybe they start to do it. But don't forget, we're right near the election at that point, and the Fed doesn't usually like to make moves at that close to an election. That brings us to December. Right now, the odds are one rate cut in December. That's what the bond market is thinking. One more for the rest of the hike. Yes.
Yeah. Jill Schlesinger, thank you so much.